Hey everybody, Jeremy here. Welcome to our weekly rebroadcast looking at the market bias update for the week. Diving right in, I want to get this short and quick for you guys. The S&P futures fighting to hold after a nice push by the bulls yesterday. Uh, we would love to see some more consolidation here, maybe on the daily chart, a push up into that 4,200 ultimate resistance level, and ultimately reclaiming that, making moves higher if it is able to push through. This is a very important resistance zone. You can see out on the weekly chart, this is the third time that we have tested it in the last 3-4 months, and we also tested it twice back previous to the ultimate lows that we had in beginning of October. So really important for bulls to be able to retake that. If they do, that is a really nice breakout on top of a ton of consolidation, on top of a kind of head and shoulders pattern here, signaling potential end to this bearish downtrend. Now that is just looking at it fully in technical view. Obviously, we do have a lot of recessionary fears and inflation fears and just competing narratives in the marketplace right now. So anybody's guess, but if you have to bet one way or the other, which we as traders do, the lean has to be to the upside at this point. All of the moving averages on the weekly chart are cooperating. Even the 50 has curled and flattened out down here. I love how tightly consolidated the 920 and 50 period weekly moving averages on that weekly chart are. I love that we are holding this kind of higher pivot high and the 9 EMA right now, both on the daily chart, also corresponding to some support and resistance from back there at about 4,100. So we're just above that. To me, it looks like we're at least going to tip 4,200, if not try to actually break and close above that. Really like the setup on the S&P 500. Obviously, if the bears do take over, if we get some bad news or something and the bears do break down, on the lower side, 4,050 looks like a pretty solid support level. Below that, we're really coming back down to probably between 3,800 and 3,850, this kind of lower range from the previous two pivot tests that formed this bottom of the channel. So either kind of consolidating in this upper range between 4,100 and 4,200 with an ultimate breakout to the top, or if we do pull back, looking at that 4,050 and then ultimately down to about 3,800 level for ultimate support to try once again. If we take this out from the S&P, let's go to the NASDAQ next. So NASDAQ not doing anything wrong. Last week, we'd said that we'd love to see a little bit more consolidation pop up into the resistance level around 13,740 or 50 area, and then consolidate a little bit between there and let's just call it 12,000. Let's just call that 13,000 on the lower end. So not doing anything wrong on the daily chart. Really like it. On the weekly chart, looks like we do have more room to run here to potentially come up and test these highs, like I said, around 13,740 or 750. And you gotta like it. Double bottom, broke out, nice W formation, pull back into the resistance zone, nice bullish confirmation of the upside. The weekly chart on the NASDAQ is now officially confirmed bullish. Obviously, anything can happen in the short term. I would actually love to see some consolidation and constructive nature here before we end up moving up higher. The more we can form these good solid support levels on the way up, the easier it is to find those support levels on the way back down. So just a healthy market has these stair steps up constantly. When you have really big runs that don't have any real pivots in between them, it's easy to give that up. Right now we've had this run, but it's been broken up by two nice pivots moving forward, looking to form the third there. So really love the look of the NASDAQ. Going out to the Russell 2000, weakness in the chart. You gotta say that this Uh, this has to be leaning bearish, right? The 50-period moving average is still acting as pressure on the top side, as well as the 20 and 9 EMA. We did break down a fairly significant support and resistance level right here. Are struggling to firm up right here and ultimately have probably down to the 16,050 mark that we could go. The 1650 on the lower side and up to about 2000 to 2040 looks like the real important zones on the weekly chart that we still need to see recovered there to be able to look at this as any longer term potential. Finally, going down to the Dow Jones. Dow Jones has cleaned itself up a little bit. Let me get rid of the drawings there for you. It's cleaned itself up a little bit. It did break down. It set a new lower pivot low here, which we don't like. And this also is in kind of a retracing flag, choppy retracing flag here. If it can break above and close above this diagonal resistance, I don't mind it. I think it cleans up a lot over 34,000. So trying to clear this pivot high, which was just shy of 30, let's call it 34,000, just shy of 34,000. I would like to see it actually clear 34,000. If this gets above 34,000 there, I think that we'd come back up and retest around the 3,500 or 35,000 mark. But we need to see that clear above it. And on the daily chart, if we drop this in real quick, we've had some consolidation here. I wouldn't mind a few more days of consolidation. I know this is a really, really tight range, and we probably won't actually get that before it breaks one way or the other, because it is looking like it's coming right into that resistance channel now, and it's getting pinched by the rising 9 EMA here. But a guy can hope, right? So if we get 1 or 2 more days of really tight consolidation here, that would be a really interesting play to play the top side with a break above those highs and play the bottom side with a break below those lows. Either way, I see that being a potentially good little run. So I kind of like that. It's the first trade on the Dow Jones that I've actually looked at and been like, yeah, I might be interested in that for quite some time. It's been a long time since I felt any interest in trading that. Looking over to silver, I mean, what can you say? It got just absolutely smoked, has made a really nice recovery. I mean, this is probably 2.5, 3 weeks worth of time closing above the 9 EMA, just on a tear. Didn't even really hesitate at this massive resistance level that we had around 2466. Blew straight through it with basically a bullish Harami candle, and is now basically poised to take off again. I don't like necessarily looking at it as an actual entry because it is so overextended. I mean, if you drop down and look at the RSI here, it needs to chill out at least. If we saw, 4 or 5 days this week, all really tight here, forming a nice little consolidation zone or high base and then a break, I could be interested in it. But if this breaks, in the next couple of days here, I'm going to miss it because I just don't simply like to chase things that are that far overextended. But it does have a very nice consolidation zone there. Let's pop up to gold next. Gold has been a little bit more constructive than silver. It's still holding its 9 through the whole movement that it's had, but it has had some oversized moves that have digested and set little pivots. So I really like that. Honestly, I would love to see it chill out just a little bit longer and stay kind of in this little megaphone arena. If it would pull back out down to 1980, somewhere in there, I feel like we could get a really good trigger for another run here. But again, I don't like chasing things when they're overextended, and our RSI is still showing that it is on the high end there. We're also seeing a double top on the MACD here, and that looks like it's trying to cross back over. So gold looks like, just pure technically, it has a little bit of time to potentially chill out here for us and let a new trade develop. Next, let's run over to Bitcoin real quick. And sorry for all of the drawings. Let me clear those again. There we go. That's much better. really like what Bitcoin's doing. I mean, it hasn't done anything wrong. It had this massive move higher, followed by a little kind of ascending triangle pattern here, or flag pennant pattern here. Really like that. And that is usually a signal for a break to the upside, looking for continued movement. And sometimes even movement equal to the movement, the price move that led up to the consolidation, which would be this entire run right here. So just out of curiosity, I want to take that and see what we would be targeting with a break above this diagonal. We could be targeting somewhere in the 38,000 arena, to even up closer to like maybe 38,250, somewhere in there, based on that previous mechanic. Just a little lesson there for targeting. These big movements tend to, especially in a sustaining trend, stay the same, and in a trend that is gaining momentum should actually be increasing. So really, like, fairly comfortably, I think, target the 32,000 mark on Bitcoin to the upside, just because we do have some price history here. But if it can clear that 32, I could see this coming up to 35, 36, maybe even 38 on its next big move. So really interested to see what Bitcoin does over the next, 2 to 3 weeks. But we know that Bitcoin likes to move, so when it breaks one way or the other, we tend to get moves very quickly. So it could develop much, much quicker than that. I mean, this could be 24 hours from now, and we could already be talking 32,000 or more. So who knows on that, but I really like the setup here. I think a trigger above this pennant makes a lot of sense. And there are tons of different proxy stocks and things that you can trade in Bitcoin. You'll see this is the exact same pattern here, big run up, pennant shape here, looking for the break higher. Bitto is a really good ETF for the Bitcoin kind of proxy land. And it also has really liquid options. So just to point this out, if you go out 33 days on the option chain, you can get over 4%, actually probably closer to 5 or 6%. Look at the bid ask spread there. We need that to tighten up during actual market hours to be able to say for sure, but at least 4% on the lower end for selling naked puts 30 days out. Looking for assignment, by the way, that would be a high delta, high price strike. Looking for assignment here, and just a cash flow in the meantime, looking for an eventual break higher for Bitcoin. That is definitely my personal bias. So anyways, Bitto is a good one. Mara is another one, although this one is actually a miner, so it doesn't track the movement of Bitcoin as much. You'll see the pattern over here is quite different than it was on the previous one. So Mara is another good one to look at, but between the two, I would say cash flowing on Bitto, looking for assignment, would be a really good way to play that. Finally, to wrap up today, looking at crude light, and this is a super interesting chart. You don't see this very often, but last week, crude light gapped hard on the futures open and just stuck the landing like that. Look at that tight base here. And it gapped basically because there were massive oil supply cuts. And obviously that drives demand up when supply gets cut like that. So anyways, gapped up, stuck the landing, and it is caught right now between a couple of really interesting geopolitical things. So on the one side, we have recessionary talk. And if we go into a recession, that is obviously bad for oil, right? Because it's going to decrease the travel spending and the gas people are doing road trips with, and like all the things. So if we go into a recession, people aren't going to be doing that as much. So that's bad for oil. But on the other side, we have the continued story of China reopening and like getting their economy back online ever since COVID. And so that China reopening and demand coming back online offsets that. How much, we don't know. That's the question that every trader has to ask themselves, and if they are wanting to try to play this. I don't think there is really a trade here yet. I need to see hopefully a pullback down into like the 76 level, and then come back up and let this 200 period moving average work itself down into this resistance zone. So for me to be interested playing to the upside, that's kind of the ideal of what I want to see over here. Anyways, I think that wraps it up. Overall, S&P looking really good. Specific sectors still leaning towards communications and tech. Also, healthcare look really good. I'm not going to spend the time going into that today, just because I'm seeing some triggers going off and I need to get in front of a couple trades here. But anyways, hope that helps, guys. Looking for tech and communications and healthcare plays to the bullish upside. Overall, RUT looking slightly bearish. It's the weakest sector right now. Dow Jones looking interesting, but needs some more time to catch up. NASDAQ looking great and S&P looking great.